Hey, welcome to the Guaranteed Retirement Guy show. So today I want to answer a question. Should a 65-year-old buy an annuity? Well, guess what? You can buy an annuity pretty much at any age, but there are certain ages where it's better than others. And I would say if you were going to retire at 65, the best age to purchase an annuity is either at 65 or even perhaps 5 years earlier or even 10 years earlier. Because if you buy them earlier, you have what's called a roll-up rate that is applied to that account value every single year. So if it's an 8% roll-up rate and you're going to retire in 5 years, it might make sense to purchase an annuity now, knowing that it's going to earn that 8% every single year. And by the time you decide to start taking that income, they are calculating that income on a much higher balance. So that's where setting up a meeting with me might make sense. We can kind of look at those options. All right, so I'm going to share my screen, and I just want to share this. I put Nevada, I put 65 years old, I put 500,000. Your amount might be less, might be more, doesn't matter. This is just an illustration to kind of show you what this would look like. So 65 years old, and then I'm putting in a spouse at 65 just to make it easy. Okay. If the spouse is younger, the payout will be a little bit less, especially if the spouse is a female because they live longer. Okay. If the female is older, then it might even out about the same as if you had a single life payout. If you're single and you just want a single life payout, it is typically higher than joint payouts. It just depends though. All right. So if I were to defer the joint income 0 years, meaning I want to take income right now, you can see the annual income is $35,863 for the top annuity. Okay. And then it goes down from there. But let's say I'm 65, I want to buy an annuity and I want to wait till 70. Maybe I want to wait till I'm 70 to take Social Security because my full retirement age might be 67, but I might want to make another 24% a year. I want an extra 24% in extra income if I wait till 70. And maybe I want to work longer. Well, I'm going to work longer because I enjoy what I do. So if you work with me, you're going to be working with me until I'm 80, maybe 90. Okay. Just to put that out there. But all right. So let's say I decided to fund this for $500,000, knowing that I'm going to take income, joint income in this case, in 5 years. Okay. So I'm just going to scroll this out here. And we're looking at income, of course, at age 70, which I'm deciding at that point to also take my Social Security because, you don't want to wait longer than that, but you get your maximum payout at 70. And then I'm going to also get a much higher income payout. Look at that. We're looking in the $50,000 range. Not bad. If you went with the B++, it's 54,667. You don't have to do that. Most people stick with A-rated, but you can do whatever you want. So not bad. So you got some options here. And when you're looking at, let me just show you exactly how this works with the roll-up rate. I have other videos that talk about roll-up rates, but let me just share this. I'll show you exactly how they are calculating the income because you're letting this sit in this annuity, which in this case, it's Income Shield 10 with American Equity, and they're paying an 8.25% roll-up rate. You can see that over here on the left. And so they're paying that. And if I scroll down, you'll see the income base. See it right there? That income base, they're giving you a 10% premium bonus. So they're putting $50,000 in there. So it's $550,000 multiplied by 8.25%. And then they do that every single year until you take income. Okay, so you take income after 5 years, they're going to multiply $776,000 times 6.68, and that gives you $51,895. Now, of course, if you were to take income immediately, it's $36,735. So that's really, it comes down to the question of if you can wait to retire, you should buy an annuity now versus waiting to retire. Okay, because if you do, you're going to have that roll-up rate compound against your income base value. And it's going to give you a lot higher income later on had you not waited. So, and there is power in compounding. As you know, interest, when it compounds for us, is our best friend. Well, that's the same with these annuity roll-up rates. You get that 8.25%. That's earning every single year on your account. and they're using that to determine your income. So it's pretty nice. There's a lot of things you can do with this. And when you're looking for guarantees and you want some growth, but you want as much income as possible, then maybe investing in an annuity earlier than age 65 would work better. Maybe you should invest at age 60. If you have access to funds outside of an employer sponsored 401k, before you're 59 and a half, so you have access to maybe money in an old 401k, maybe an IRA or some other stock or brokerage account. You can invest those funds and let that sit and grow and compound. So maybe you're 50 years old and you want to purchase an annuity for $500,000. Well, then that's going to compound for a 7%, not an 8%, but they'll give you a 7% for 15 years. And that's huge. That's huge. Okay. In fact, I'll just show that real quick so you can see what that looks like. If I were 50 years old, okay, all things being equal. So we'll say 50, we'll say my spouse is 50, and I'm going to wait 15 years. So that is, of course, that deferral is giving me a lot more growth for income, a lot more guaranteed growth. Look at that. Now we're looking at 79,375. And you got the rest of the other annuities, down below. So 79,375. So that $500,000. And let me just show you real quick what that looks like as far as the 7% calculation. Because remember, they're going to give you a 7% every year for 15 years. So let's see what this looks like. So you can see the income base column. You see that column right there? That is growing to $1.3 million. And they're going to multiply that by 6% and give you 79,375 for the rest of your life. That's pretty good. I mean, it's going to take you like 7 years just to get your initial principal back. And then everything else is gravy off of that. How's that for a return? That is phenomenal. So you're going to take out almost $80,000 a year for probably 30 years because people are living longer. You take that out for 30 years. How much are you getting? You're getting, $2.4 million in income from $500,000 just because you decided to act early, take advantage of the roll-up rates, and let that thing grow so you can have a huge amount of guaranteed income. So compare that to your stock account. Compare that to your 401k, your advisor that's telling you to keep the money in there, keep paying him a 1%, hoping that it'll be a certain amount by the time you retire, and then you can turn on income from it. But he doesn't tell you about any of these roll-up rates or any of these other calculations that you could have working for you to give you a much higher payout, guaranteed for life. Okay, so if that makes sense, you want to chat about it, book a call with me. Just click on the link below this video. You'll see a direct link to my calendar, and we'll get on a call. I'll show you all the numbers. I'm not going to try to hard sell you anything. I'll just show you what's available, and then you decide. Okay. I love showing these. I love setting people up for success and for guarantees and really for peace of mind. So if you want to chat, book a call. I'd love to speak with you and look forward to seeing you then. Thanks, and we'll see you in the next video.